Ashwat, thanks very much for joining us with that. Now, moving on, D2C home and sleep solutions company Wakefit has raised $40 million, or about 320 crore rupees, in Series D funding. Now, this round was led by Investcorp, with participation from all existing investors, including Sequoia Capital, World Invest and SIG. Wakefit plans to use the incoming funding to work on its delivery operations and factory and expand to more cities. In addition, the company said these funds will boost its manufacturing and supply chain capabilities and ramp up hiring across various levels. Joining me now to talk about this latest fundraise and the company's plans to scale up operations is Chaitanya Ramalingegowda, who's the co-founder and director of Wakefit. And also joining us is Varun Laul, who's the partner at Investcorp. Aishwarya, my colleague from Delhi, also joins in. Chaitanya and Varun, thank you for being with us here. Chaitanya, let me start with you. Tell us about this fundraise, what you plan to do with these $40 million, specifically in terms of expansion, both in products and geographies.
Thanks for having us. What we've done at Wakefit is to build a very fundamentally solid company which does not rely on external funding just for survival and day-to-day operations. So the same DNA is continuing. Basically, what we are doing with these funds is threefold. Number one, we are continuing to consolidate our market leadership position in the sleep space. So we are by far the leading online mattress company. So can we continue that leadership position and become overall in the industry number one over the coming few quarters? Number two, we want to continue to invest in the supply chain. We currently have the ability to deliver our products in about the furniture products in about 23 cities and mattress and sleep products all over the country. So can you continue to strengthen and go deeper and be present where the consumers want us to be present? That's the second aspect of it. The third aspect of it is to continue to invest in the brand building activities. Despite being a 7-year-old company, despite getting towards 1,000 crore revenue this year, and that too very close to being profitable, there's a huge part of India that probably does not know about Wakefit and its products. So can we continue to build that brand and be part of the consideration set whenever somebody thinks about buying any product in the sleep or home space? That's the dream, Ritu.
Okay. All right, Chaitanya, close to being profitable, you said. Let me actually put that question to Kunal, your investor. Kunal, investors are being doubly cautious in writing checks in the current environment. What made you bet on Wakefit, and what kind of opportunity do you see for growth in the sleep industry?
So, Ritu, good evening, and thank you for having me. Just a small correction. I am Varun. Anyway, to answer your question on our investment thesis for Wakefit.
I'm so sorry. Yes, Varun, go on.
No worries at all. It just happens. So going back to Wakefit and our thesis on Wakefit, right? Look, at Investcorp, we have a very strong thesis on two core themes. One is the fact that Indian consumption is increasingly becoming omnichannel, not just digital, not just offline, but omnichannel. And second, there are large sectors, especially on the consumption side, which are unorganized, where there is great scope for the uptrading from unbranded to branded. Now, if you look at Wakefit, it operates in two segments: sleep solutions, which is mattress, furniture, or the home decor space. These are very large addressable markets, again, very unorganized. And what Ankit and Chaitanya have done, or Wakefit has built a market-leading brand. They've built great distribution. They've built a brand that is trusted by consumers, and they offer a very differentiated proposition. Now, these are things that align very, very closely with the criteria or the investment choices we at Investcorp would like to make. In addition, and most significantly, actually, as far as Investcorp is concerned, in Ankit and Chaitanya, we have two first-generation founders who've demonstrated great execution capability. They've been able to innovate and, more importantly, build a very capital-efficient business model. If you put all this together, it makes for a great investment story. And we're really happy to be sort of part of this journey as these guys scale up. They, get to a profitable scale, they cement market leadership, and become a publicly listed company.
Now, Chaitanya, quickly jumping in, Ishwara here. Like Kunal said that, you're building a capital-efficient company. You're also hoping to close FY23 with rupees 950 crore of revenue and FY24 with rupees 1200 crore. Tell us what is going to be the key revenue driver for you.
Yeah, like Varun mentioned, one of the things that you will see is that we are three companies rolled into one. That's how we have sort of evolved. We started off as a mattress company, expanded into accessories, and now today we have home decor and furnishing as the third large business unit. So that has become a blessing in disguise because each of these categories behaves differently, and each of these categories is in a very different stage of maturity. So mattress, which is the 7-year-old, mature, very steady business, is still growing at a fair clip of about 45 to 50% year on year. And the unit economics are very stable. It's EBITDA positive as a business. And it's a very, very steady business where we are converting both unorganized buyers to the organized segment and also taking away some share from the other organized players because we are a new age company that is able to innovate faster. So that is still on a large base. It's still at about 45-50%. Accessories, people might underestimate this business, but it's a great way to actually activate risk-averse consumers who want to try the Wakefit promise on a small budget of 800-900,000 rupees with a bed sheet or a pillow or a comforter, and then come back for a hero product a few months later. So this is again on a base of nearly 100 crore, is growing at about 30-40% year on year. Now coming to furniture, I'm not sure if you're aware, Wakefit has set up India's largest furniture factory. And given that it's a smaller base of about 200-250 crore, that business is growing at nearly 80-90% year on year. So when you put all of these three things together, the growth comes from all three, but at different clips and from an online and offline split. Over a period of time, we see that the offline stores, which are currently only about 14-15, are going to be grown to about 100 stores in about 20 to 25 cities over the next 24 months. So that also will become a very strong contributor to the revenue.
Well, Chaitanya, we did visit your furniture factory, so we do know about your furniture plans and how that's already contributing about 25% to your revenues and your plans to go public in the next 24 months. So we wish you all the very best for that, and Varun as well for joining us here to talk about his investment in Wakefit. Both of you, thank you very much, and I'll toss it back to Aishwarya in Delhi.
It's time for a break, but coming up, a special chat with